The shenanigans will be at the layer above, which is the ETF itself and the leverage that gets built on the ETF itself. I've seen a lot of discussion, and some folks are getting stuff really right and also getting stuff really wrong, some of the same people. I'll just say this is a double-edged sword. There are good things and bad things about the ETFs.
Welcome everybody into an exciting space here on Coinage. I'm super stoked to have back with us on the show today one of the most correct guests you're ever going to find in the Bitcoin space, and I think that will be true until the end of time. Caitlin Long, the founder of Custodia Bank, back with us here on Coinage. Caitlin, so good to see you again.
Zach, it's great to see you. Happy New Year.
Happy New Year. I was excited to have this chat because there are so many questions floating around in the crypto space and the Bitcoin space now that we have Bitcoin ETFs approved trading. By all accounts, it seems like it's gone really well, but I just want to get your take first, I guess, on, what this changes, and then we can get into maybe some of the risks people might be overlooking using your decades of Wall Street experience and how right you've been. But first, what do you make of, I guess, how these ETFs have changed the game?
Well, there's about 10 billion of volume. That's a pretty successful launch volume-wise. Operationally, it doesn't seem like there have been any glitches, to your point. The price obviously has been hit, and that's the interesting discussion that a lot of folks are having. And a number of folks have come forward with analysis of the GBTC impact and the unwind of the so-called Widowmaker trade, the last bits of that Widowmaker trade, because it's been locked up at GBTC, that there's some extra selling that's taking place. That may be true. Nobody really knows. But yeah, lots of folks talking about it for sure.
Yeah, when you talk about that Widowmaker trade, I think it is pretty fascinating to think about. I was reflecting on your chat with Sam Bankman-Fried on stage at Bitcoin Miami, where we first met, actually, and just thinking about how right that's been in this discussion around leverage. And we can talk about how Wall Street's preparing to add leverage to Bitcoin very soon. But I mean, when you reflect on that and how right you were around leverage, what makes you kind of like take a second glance at what's going on with these ETFs now?
Well, I've always known Wall Street wanted to get in and play leverage games, right? Because that's what Wall Street does. And it is a system that works pretty well. But on the margin, it is also a system that privatizes profits and socializes losses. And in particular, when you get into these edge case situations, there are very smart people who know how to arbitrage the fault tolerance in the settlement system. And that's where you start to see some of the games being played. And one of the things the SEC did right, I'm not afraid to call balls and strikes against the SEC. A lot of folks in this industry are universally negative. I am not. The SEC for sure got one thing right on this ETF, which is they are not allowing the custodians to do anything with the ETF, with the Bitcoin in custody backing the ETF. It stays inert. No leverage, no rehypothecation, no lending, nothing. So at that base layer, that is actual Bitcoin sitting in a custodian, goes through the Bitcoin blockchain, no shenanigans there, assuming that the custodians comply with the rules. And I do believe they will. They are NYDFS regulated trust companies. And of course, Coinbase is the big one, and then Fidelity as well, but they're both NYDFS trust companies. So that's not where the shenanigans will be. The shenanigans will be at the layer above, which is the ETF itself and the leverage that gets built on the ETF itself. I've seen a lot of discussion, and some folks are getting stuff really right and also getting stuff really wrong, some of the same people, about just presuming that Coinbase is going to be playing leverage games and Fidelity. I don't think that's going to happen. And they are regulated. They're not going to be able to do that. There are some issues with the trust company structure, as you and I've talked about before.
We have talked about that, yes. And that was a good debate that we had on Coinage before.
Right.
And that was a debate that you won. But I do want to ask about that piece because I do think it's right or important to get right. We're going to have SEC Commissioner Hester Peirce back on Coinage on Monday. So we'll be asking her a few questions around some of this stuff too. But there was one tweet that kind of, I think, gets to your point around leverage. And it's not so much to do with the risks around the custodians, as you're right to point out, but it is more so about these other leverage-based, I guess, plays that could be coming to the market around Bitcoin. And specifically, I think, as you've raised, some of the issues around, how everyone else looking to take a slice of the pie might play this. I mean, what are
Yeah.
you watching for? And maybe what are you signaling to watch, or to tell people who are maybe worried about the same things to watch as we move forward?
Well, one of the things is you can't really easily watch this. And the reason is because there are all these fault tolerances built into the system. I'll give you two examples. One is the market has, the SEC and Congress really has determined that they prioritize liquidity over solvency. They want
Hmm.
liquid and continuous markets. And so they allow the ETF market makers, for liquidity purposes, maintaining continuous markets, to go naked short so they can create more ETF shares than they have actual collateral. This is true for all ETFs. Go look at the prospectuses. And that's just the normal structure of ETFs. And so what that means is that you can have an uncovered short position in an ETF that's supposed to be temporary for purposes of making markets. Okay, so that's one place where you can get some leakage. Again, it's not real Bitcoin though. This is creating extra units of the ETF, not creating extra units of Bitcoin. That's the difference. And so the other one is there was an anon that goes by the name Dr. Gingerballs, who
I
put a
also saw that and I was like, oh boy, we
I
got
know.
Dr. Gingerballs on the case. But he was, he's flagging good things.
Yeah, he was writing good things. He clearly knows, and he pointed out about the continuous net settlement system at the DTC. Now he's also gone, I think, overboard and said I don't. He doesn't think that the Bitcoin custodians are going to be backed one for one against the ETF, and I disagree with him there. I think he's too negative, but his point about continuous net settlement is spot on. That's one of the many fault tolerances that are built into the settlement system. And specifically, what it means is because Wall Street systems are never in sync with each other. Think about that, never in sync with each other. That what it means is that they're constantly rolling a netting system to net out debits and credits, and you can have a failure to deliver. And he points out that if you have a short position and you can't deliver the actual ETF share into that short position, you can roll it for 35 days and then you can just keep rolling it.
Hmm.
That's the way the continuous net settlement system works. Now, so what is the impact of all of this? Is it going to swing around the Bitcoin price? Sure. But is it really going to hurt Bitcoin? No, of course not. Base layer Bitcoin is immune to all of this. It just has an impact on the price. And as we
Well,
saw
that
with the
seems that
leverage
seems
games,
pretty big, though, right? I mean, when we think about having an impact on the price, I think that that's the fear that some people are maybe raising, is that maybe was this a Trojan horse? Did we open up Pandora's box by letting some of these games be played that maybe couldn't have been played before, though it maybe did still be played by crypto players
well,
themselves.
they
Now
were
it's just Wall
definitely
Street
played.
playing these
Of
games.
course. Yeah.
So, the games are always going to be played, but I guess that's the main question that and fear that a lot of people have is, did we open Pandora's box?
Well, yes and no. I mean, that's why if you go back to the 2018 columns that I wrote in Forbes warning about leverage-based financialization, those were the first columns that I started to talk about rehypothecation. And I talked about the ETFs because there was a movement to get the ETFs back then. And here's what I thought was going to happen back then. I thought the Wall Street firms were going to move in and take it over. And I saw it with Backed, which is a company started by it's a sister company to the New York Stock Exchange, a subsidiary of ICE, which is one of the biggest clearinghouses in the world, and that they were pushing for the Bitcoin ETF as well as the futures ETFs. And my biggest concern, I started writing about how this is a double-edged sword because you're going to be bringing more liquidity, but you're also going to be bringing all these leverage games.
Hmm.
And ultimately, Bitcoin, because it is the apex predator of finance, is going to bite all those leverage games in the you know what. But that doesn't mean that they're not going to be able to kick around the price for a while. And back then, I was also expressing concern because ICE Clear US, which is one of the clearinghouses that ICE runs, again, sister company to New York Stock Exchange, is there's a lot in ICE Clear US, and they were doing the Bitcoin futures clearing through that entity. And now you can get what's called commingling and collateral substitution. Okay, and you get that in prime brokerage as well. It's not just ICE Clear, but that was what I was signaling out at that time, was specifically that there were going to be collateral substitution games, right? Because if somebody got over their skis on a trade on a Bitcoin future,
Hmm.
they should have had to deliver real Bitcoin into that trade, but they, because of the way the collateral substitutions work, they can deliver cash or they can deliver Apple shares of equivalent value into that trade, right? And now you start to see how you can't keep track of all of this. You really can't keep track of the size of the uncovered short position in any asset because of the way the Wall Street systems are set up. Now, I wanted to try to make a better system. I do believe the system has instability inherently. This is why periodically you get these just pukes in the system,
Hmm.
and that's not an accident. They keep happening, and why do they keep happening? Because there's a lot of instability underneath it all that is very hard to measure.
Yeah,
Because
and I
all
guess
these, yeah,
Yeah, well, I guess, obviously, again, we're going to get into your battle to create what you're creating at Custodia, and how much pushback you've gotten from the traditional banking, I guess, war that's been going on there. But around the net, right? If you could just boil it down, because, we're going back and forth around maybe some of the fears, how realized they might be. I mean, when you step back and look at it, all right, we're back at 42,000. Price matters to a lot of people who are in the Bitcoin world.
yeah.
And they're weighing. We just had a bunch of money come in via these Bitcoin ETFs, price not higher. When you step back and think about where we might be in a few months, like, what to you is the net? Is it generally still a net positive or a net negative?
I, it's a double-edged sword, and I don't make price predictions. I, am a hodler, right? I'm part of the hodl gang, not the trading gang, and
Yeah.
I know this is really important to the traders. I wish I could tell you that I knew which direction this was going to play out. I do think that there is something to the unwind of the GBTC trade, the
Hmm.
Widowmaker trade, and that once that finally plays itself out, that some of that forced selling is going to be gone. And don't forget, we have a halvening coming, and halvenings. Go look at the history. There's a real reason why the price tends to dip right after the halvening, because a lot of mining that was profitable before the halvening and then suddenly becomes unprofitable. Those miners shut down and liquidate, and so there's
Hmm.
some forced selling that happens, and you start to see the real effect of the forced scarcity come about 6 months later. Well, what is 6 months after the April halvening? The US presidential election. So it's going to be really fun to see, Bitcoin entering into a bull market if past is prologue. And I think it will be. There's fundamental reason for it coming into the US presidential election. But the precise direction of all of this, no
Hmm.
one really knows. I'll leave it to the folks who are in the business of making Bitcoin price predictions. I'll just say this is a double-edged sword. There are good things and bad things about the ETFs.
Yeah, you and I think, are in the same camp, and we would both probably classify our views on Bitcoin as the same when we look at it as, more of it's just something that you hodl on to for dear life forever. And you just sit there and
Yeah.
you say, okay, let's see where we go. But generally speaking, it's these games that have a lot of people worried when you look at it. And I guess I think, moving forward with some of this playing out now as people wrap their heads around it, you talk about the short squeeze, the mother of all short squeezes that could play out. And
Yeah.
let's explore that disaster scenario on one side, but it could be, the God candle on the other, is if these games do continue playing out and there is a short squeeze where people are over their skis and they realize they can't print more Bitcoin, how do you actually envision that going? Because we arguably saw it before with GameStop and all these issues of so much shorting that there was a short squeeze.
Yeah.
But the
Yeah.
DTCC came in and basically halted trading and fixed everything, and that can't happen here.
Well, it can't happen with the underlying Bitcoin, but it certainly can happen with the ETF. The ETF is a security that's DTC cleared, right?
Hmm.
So they can do those same things, right? When you've seen some of the craziness in markets. I'm thinking back to some of the operational failures in the system, and the DTC will come in and reverse trades. And people who made money on those trades have their money taken away from them. because they just reverse trades. And this is, frankly, part of the stock exchange rules. They have the ability to do things like that. That doesn't exist in Bitcoin. And so, again, if you're buying the base layer Bitcoin, this is probably the biggest piece of the biggest takeaway that I would advise your listeners to understand. You don't own Bitcoin if you own the ETF. You own a derivative of Bitcoin that may be price linked to Bitcoin, but it's a wrapper around the actual Bitcoin, which is held by Coinbase.
Mm-hmm.
And so you're actually two layers away from the actual Bitcoin, because you own an ETF which has a pro rata share of the pool of Bitcoin owned by Coinbase, which owns the actual base layer Bitcoin. So you're two layers away from Bitcoin. You do not own Bitcoin. You own a derivative that is supposed to track Bitcoin. And the question is, will it track Bitcoin better than the GBTC fund structure did? It should. But that doesn't mean it tracks it very well. So just beware. I mean, this is a new trading instrument. It's going to definitely bring in new demand for Bitcoin, new liquidity. All that is a positive, but it also brings all these negatives with it as well.
Yeah, and I guess teaching people about that is part of why we have you on today. But of course, it's not the only reason we have you on today, because there are a lot of other things going on right now, including the fact that I guess, we talk about you kind of being the example in Bitcoin to look to in terms of, someone who's trying to build the right way in banking. This morning we heard from Jamie Dimon, who constantly always seems to have the same take on Bitcoin for the last 7 years, despite the
Yeah,
fact that price continues to change. And I believe he referred to Bitcoin this morning as shit, I think.
he did.
Um, and and I'm just curious your take on kind of that, despite the fact that Larry Fink has changed his mind, and yet Jamie Dimon's still in that camp.
Maybe he will change his mind. I would say two things: watch what they do, not what they say. J.P. Morgan is one of the authorized participants in the Bitcoin ETFs, and also the fact that he's actually using an expletive. I mean, he called it a pet rock a year ago, and now he's graduated to an expletive. That tells you he's getting flustered. We must be over the target, right? Um, but look, a lot of TradFi people, they are so in their tunnel vision and their groupthink that they cannot see that there's a different way of thinking about the world. And there was a big kind of a tussle, and it started as a respectful back and forth over the weekend with a TradFi macro analyst who respectfully asked questions about a tweet that I had that started it all, where I said, look, more than 70% of the Bitcoin is squirreled away and it doesn't trade. And that's a good thing. That means Wall Street's not going to be able to build clearinghouses like we just talked about to paper over temporary insolvencies that it can do with everything else, including gold, right? When Wall Street controls the underlying gold, i.e., the gold is at the central banks, right? Wall Street controls it. They can create these fault tolerances in the operational system. Well, the Bitcoin blockchain does not allow that, and that's a feature, not a bug in my mind. So the punchline is that these TradFi folks, I was trying to get at, where are the fissures, right? And we see real fissures, right? Half the asset management industry is in on these ETFs, half is not. Half of the big wirehouses are allowing their customers to have access, half are not. This has opened a huge fissure. And it's a tiny market in the grand scheme of things. So it's interesting that it created these two camps. But where I was going with her is to try to understand where is the big misunderstanding. And it comes down to three things. The biggest one of which is they think money is what the government says it is, versus most of us think money can spontaneously arise through human interaction, and it's purely what humans decide to use as a good that becomes a commonly recognized medium of exchange.
Mm-hmm.
A second one is, it doesn't have to have intrinsic value to have value. They believe the answer is yes. By the way, think about number one and number two. Those are a little bit contradictory, right? Because if they say money is only what the government says it is, and then they say every asset has to have intrinsic value, those two things contradict. But fiat currency has no intrinsic value, right? So it's kind of funny that they're pushing Bitcoin is a zero because it has no intrinsic value, versus Bitcoiners who have bought into subjective value theory. So that's number two. And number three is the definition of inflation. The Bitcoiners would say inflation is an increase in the money supply. The TradFi folks would say inflation is CPI and PPI, et cetera. And the Bitcoiners look at CPI and PPI and say that's the effect of inflation. It's not the actual inflation itself. It's
Hmm.
caused, as Milton Friedman famously said, inflation is always and everywhere a monetary phenomenon. But the CPI and PPI increases are caused by the fact that there's too much money chasing too few goods.
Yeah.
So those are the three fault lines, right? And what I was trying to get at, could we get better understanding? Once we understand where the real differences of opinion are, then we start to dig in and debate on those. But of course, unfortunately, it degenerated into just mudslinging and name calling. So Lynn Alden and I both exited before that happened, or right when that
Yeah.
happened.
Well, I mean, it's a microcosm of basically how these conversations, I think, normally always go, and because it's either one rooted in a belief, and so they don't want to look at the facts, or however it may go. And Jamie Dimon's a perfect example of that. But I think you're right to point
Yeah,
out, look at what they're doing, not what they're saying, because, I mean, I've been watching this play out. I worked at CNBC before, so I've seen the coverage. At Davos, they interview him every time, every year. There he
yep,
is, and it's the same exact thing. And I'm thinking back to kind of where we are now versus where we are then, and how far as an industry we've come in crypto and with Bitcoin. And it's crazy
yeah,
to see
it's
that,
awesome.
and to think that nothing's changed since I tried to pitch a crypto show back there and got laughed out of the room. But I will ask you what you expect to see maybe change and what you hope changes on the regulatory front, because I mean, if we think back to before Bitcoin ETFs were approved, that was the main issue. And you and I chatted about this in terms of the,
Yeah,
banking and cutting crypto off at the knees, and why I think
which is
Custodia
still
is so
happening.
important.
Yeah.
But like, what are you expecting to see, and what do you hope changes on the regulatory front, and maybe what that ties into to what you're doing at Custodia?
Well, I mean, these fights have gone to the courts, and let's face it: if GBTC hadn't sued the SEC, Grayscale hadn't sued the SEC, we wouldn't have Bitcoin ETFs. And it's because they won at the court. The
Hmm.
SEC, I don't think, would have approved the ETFs without having lost in the courts. And as you pointed out, the banking issue is in the courts with Custodia, with Custodia's lawsuit. I can't talk about the lawsuit other than the fact of it, um, and where we stand. Custodia filed a motion for summary judgment on December 20th. It was unsealed on December 22nd, so there's all that's publicly available. If you want to go find it, it's all public now. The summary judgment motions will be what's called fully briefed February 23rd, and then the trial date is scheduled for April 8th. Those dates are locked, so that's it's coming, and we'll see. But on the regulatory front, I don't expect much to happen beyond what just did. There is a chance that a stablecoin bill does go through before Congress shuts down for the election.
Hmm.
There's a lot going on behind the scenes on that front, and it's kind of funny because Custodia, of course, applied to become a Fed member bank and to issue a stablecoin. We own a patent for tokenizing a bank deposit, and there are some folks who are openly questioning whether what happened to Custodia had something to do with that, because, of course, the big money banks want to control that, and
Hmm.
they wouldn't let a small Wyoming female-run bank step in and control that. And so, look, I mean, I'll let folks draw their own conclusions about it, but
Yeah.
it is a club, and Custodia at the moment, vis-a-vis the Fed, is not part of it. However, we're fighting it, and rightfully so, I believe, and we'll see whether the federal judge agrees. There's one person whose opinion matters on it, and it's that judge. But at this point, we are operating, and a lot of folks don't know that. We have US dollar services, global government money market services, and
Hmm.
Bitcoin custody live in certain states. Disclaimers: check our website. We don't have all services available in all states yet, and we are not FDIC insured in our bank deposits because
Well, I
we are
think
not an
it's
FDIC insured bank.
no, but you're fighting the good fight to get there, and I'm saying this in in the capacity, not just because we're friends and you come on the show and everything else and we know each other, but I think it's important for this community now to kind of rally around people who are trying to do things the right way. So I mean, using the small microphone that I have here, listen, I think that these fights are going to increasingly matter. We've already seen how they matter in this
Yeah.
industry, kind of building around the right people. So I will be watching what you guys are doing and trying to support in any way I can. And I think
Thank
everyone in
you.
the community needs to do the same, because these are fights that matter. I used to pay attention to crypto just because of price. The deeper I've gone, the more I've seen that these battles are real. And what you're
Oh yeah.
describing is not fake in terms of only trying to let the entrenched players win. And
Oh
I think
yeah.
it's on all of us to really step up and say, all right, we need to get behind the people who are trying to do this for the industry the right way.
Right. Yeah. I mean, obviously, it didn't work out for Custodia the way we expected it to. The state of Wyoming worked. It's now a lot has been made public. It is now public that the state of Wyoming and the Kansas City Fed were meeting weekly about the new Wyoming Special Purpose Depository Institution charter. Okay, so Wyoming did not do this in a vacuum. And then when some of us got chartered and applied for accounts at the Fed, then we all got rug pulled. And so look, it didn't pan out the way that we expected it to. And
Hmm.
so here we are in a court process, and I'll obviously respect the legal final judgment of the court process.
Yeah.
But it is pretty far down the path. Like I said, Custodia filed for summary judgment. That is in litigation a motion that tends to come as you're reaching the conclusion of a litigation process.
Hmm.
So stay tuned.
Well, we will be watching and we will be rooting on from where we can sit, and I encourage everyone else to do the same. But when we look at maybe some of the positives here in, I guess, moving the ball forward, you mentioned the SEC and you mentioned some of the optimism there. In this ruling, we got Bitcoin ETFs. We also covered the same question of, did we only get this because of a 3-0 unanimous ruling out of DC that basically forced Gary Gensler's hand? I'm curious to get your take on maybe what we heard from him, his statement after that came out and after these all got approved, basically saying we're not endorsing Bitcoin and certainly not endorsing anything else in crypto, because now everyone's looking at ETH ETFs. And I'm curious where
Yeah.
you sit, what you made of the statement, everything else that happened afterward, and what you think that says about whether or not the SEC is maybe potentially gearing up to do the same exact rigmarole around ETH ETFs.
Yeah, I think they're gonna have to, but I think they have a lot more control over the timing. And remember, it has already been established in the United States that Bitcoin is not a security; it's a commodity. But there is continued ambiguity over whether ETH is a security, and Gensler is refusing it multiple points along the way in his testimony to Congress, refusing to answer that question: is ETH a security? For an ETF, it doesn't really matter, but the way the SEC approaches it, it definitely matters. And so I think that they'll buy as much time as they can. If we step back, it's no longer, you and I've talked about this before as well, it's no longer a secret that Elizabeth Warren is the shadow president of the United States on these matters. Okay. It was an open secret in Washington, D.C. for much of this year, but now even Mike Novogratz, who's a big Democrat, is openly talking about this. Okay, so it's no longer even a secret. And how did that happen?
Why, yeah, why do you think that is, though? Because I don't even know if I've seen that proof or where that's coming from. And she used to be so anti-big bank that it seems wild to think that she would be in cahoots. But what
Well,
what
but
makes you say that?
because multiple insiders have come forward, and some of that got revealed in the documents that were unmasked on December 22nd. Multiple insiders have come forward to Custodia from the Biden administration. These are Democrats who are not happy with the fact that the financial services policies took this hard left turn, hard left, and it's because she controls presidential personnel on these matters, and that's Biden didn't campaign on that, but
Hmm.
that's how he's governed. And what one of the insiders told me, and again, this is a moderate Democrat. He worked on the Hill and has had appointments in the Obama and Biden administrations, and he's mad as hell. He came forward and explained what was going on, and he alleged, I can't prove this. I always admit I can't prove this when I talk about it, but I've had multiple insiders now start to fill in blanks, basically telling me the same story, that her folks are in positions of power in presidential personnel, in the White House, in the National Economic Council, in the Council of Economic Advisors. Right, they're the ones setting the policy tone at the top. It's not Biden,
Hmm.
and as a result, the impact of this on the SEC and federal financial services policies, including the bank regulators, is that there was a vacuum created, I've been told, when there was a turnover in the White House chief of staff and the head of the National Economic Council. And that happened around the time, just a few weeks after FTX filed for Chapter 11. And the way that they've portrayed this to me is that initially the national security team, which was pro crypto, had the upper hand that now, all right, we got to regulate this now and
Hmm.
bring these businesses onshore. But then a couple of key people left for unrelated reasons, and into that power vacuum around the same time as you had the White House chief of staff turning over, as well as the head of the National Economic Council turning over, into that power vacuum moved the Warren team, and they locked arms, I've been told, with Gensler and with Marty Gruenberg at the FDIC, and made this big anti-crypto push. And nobody has had the power within the Biden administration because, again, whatever deal got cut between Warren and Biden, and I've been told it got cut when she dropped out of the presidential race.
Hmm.
So I can't prove any of this, but you start to see how the puzzle pieces fit together. You keep hearing the same thing again and again and again, coming
Yep.
from insiders. There's probably some truth to it. And so, the moderate Democrats, this is what's so interesting. These are not Republicans talking about this. This is the moderate Democrats mad as hell about
Yep.
how the Biden administration has taken this hard left turn. And to your point that Elizabeth Warren is supposedly anti-big bank, watch what they do, not what they say. But I will also say one person filled in the blanks. What they really want is for all of the banks to just go away and
Yep.
for all of us to bank directly at the Fed with a central bank digital currency. That's what they're really after. Okay,
Yeah,
it's
and I think,
radical
and
stuff.
yeah, and we've been watching all the things play out and putting the pieces together as well. And I think you're right to point that out. I do wonder, though, I guess, if we can celebrate something here. The pushback, and again, the win for ETFs to be approved. And I think the idea, you can look at it two ways. You can say Gary Gensler wanted to lose the battle, but not the war. So I'm going to approve Bitcoin ETFs because essentially we already have futures and I already lost 3-0 in the appeals court. So I got to
Yeah,
do what I got to do. But he puts out the statement saying it should not signal a willingness to approve listing standards for crypto asset
yeah,
securities. And if you look at the way that their approval filing went, they basically said, Bitcoin futures trade pretty close to spot, so we can approve these ETFs as long as everyone checks the boxes on what you said, no
yeah.
shenanigans. For ETH ETFs, technically ETH futures are trading, and I assume they trade kind of similar. And so a lot of people are saying it should be more than a 50% chance those get approved. I don't know what Caitlin Long says when you look at the facts and say 50% seems too high or maybe it's too low.
I think it's too high for the Biden administration. If the Biden administration gets a second term, then I think it will happen. But I don't think it'll happen before the election. That's my sense.
Hmm.
Again, they have enough justification, and there's no lawsuit telling them they have to do it. Right? The
Hmm.
courts have been the places where the action has been. By the way, there's a big court decision coming today. Well, potential decision. There's a hearing on the Coinbase motion for judgment on the pleadings in that lawsuit against the SEC.
Yep.
That hearing is today. So a lot of folks are going to be watching that. It's unrelated to the ETF, but it is kind of funny that Coinbase became the big ETF custodian. I doubt the SEC is happy about that. But back to your question of that about ETH ETFs, my gut tells me that it won't happen before the end of the Biden administration, the first term. But no one really knows. Let's put it that way.
That is true. No one really knows is a good question, but we do have Hester Peirce coming on, the SEC commissioner that's really led the battle, I think, here in at least trying to challenge publicly and openly, despite the fact that she's one of the 5 commissioners there with Gary Gensler, which always makes for, I'm sure, very interesting lunchtime conversations. But when you think about what you would ask her on maybe some of these things moving forward, what's a question that you're interested in getting answered? Because there's so much that I'm sure went on behind the scenes here to get these across the finish line. And I'm curious
Yeah.
what you're most interested in.
Well, two things I would ask her. One is, does the fact that the SEC hasn't determined whether ETH is a commodity or a security make a difference in the approval of the ETH ETF? That is a substantive question, and
Hmm.
she probably would be able to give a substantive answer to that. The other is more just the process and the politics around it. There was so much information leakage, and that allowed twice crazy Twitter news breaking that turned out to be false and moved the Bitcoin price. Okay. I've got to assume the SEC is not happy about that. Why is it that there was so much information leaking and markets were moving wildly. And then, of course, the SEC's own Twitter account. What happened with that? I don't know that she'll be able to answer that, but it would be a good question to ask her. Jameson Lopp put out an interesting tweet that the SIM swaps now, there's a new thing that's started is let's get the phone for a short period of time, not a permanent SIM swap, and that makes you have to go back and go to the Verizon or AT&T store to get your phone back. That it's like a short-term thing, and you're accomplishing one goal. And he was openly speculating, because that's a new form of SIM swap, that it's like a 10-minute SIM swap, that's how they got the SEC's Twitter account, and it didn't have secure two-factor authentication. And as a result, they were able to overtake the Twitter account just for enough time to put out the fake tweet. That was a lot of work by somebody, but long story short, what really happened there. And then, of course, the SEC, if everybody has just been brutal against the SEC for the double standards, the hypocrisy of, saying we have secure two-factor authentication on all of our IT resources, and it turned out they didn't.
Yeah, it's one of those things that we've definitely seen. Crypto Twitter was very angry about the way that the SEC has gone after private companies for moving prices for similar things, and now
Correct.
they have to have everyone asking these questions because they just did it themselves. And are they going to
Exactly. And it was
investigate
a mess.
themselves? Yeah,
Yeah,
it
it was
was a
a
mess. A
real
mess is
mess.
understating it, honestly, maybe a little bit. It could have been more than that. It was disaster situation. But I
Yeah.
guess, the last couple questions for you, Caitlin, when we think about this, and I was looking at one of the tweets that you similarly enjoyed here about SBF, and I think about your point that you made back then and the point that you make now about trading versus, liquidity, and all this emphasis on liquidity and solvency, and
Yeah.
the idea of what Bitcoin was supposed to be. I'm curious, SBF, FTX has come and gone. It might come
Yeah.
back.
Yeah.
But when you sit there and think about how hard you've battled, like, what's your take on where we are around people looking at Bitcoin? And if you feel like you might be losing, or if Bitcoiners out there are winning as more people realize, okay, I can't just custody that with someone else. Like, I need to control my own Bitcoin.
Well, we always have new people coming in, especially when there's something big like an ETF or a halving, and so there are always new people that have to go on that journey of, okay, I'll start with. I mean, it used to be you started with Coinbase. Now it's probably starting with an ETF through your brokerage account. You start going down the rabbit hole and start figuring out, well, I don't really own Bitcoin if I hold a position at Coinbase or if I hold an ETF. And so you start educating yourself, and it does take time, and it is scary to educate yourself on what self custody is. Uh, when there's a lot on the line for people, they do figure it out, and that is absolutely true in emerging markets. There's a lot on the line for people, and there was a gentleman who from Nigeria who spoke up against the TradFi poo-pooers, who were saying Bitcoin is not a payment system. And this gentleman from Nigeria spoke up and said, Bitcoin has been my lifeline. And of course, it's a store of value and a payment system for me living with high inflation, right? And so the Americans tend to see it as just a trading instrument, but the big parts of the world see it as a lifeline. And
Mm-hmm.
that's awesome. So, so yeah, I don't think I answered your question directly, but it's
Well, no, I think
interesting.
it's all tied into it, though. And I was going to ask
It
you
is.
about kind of the other thing we talked about, the halving already, but I guess the other key pieces that you see in terms of, I don't think the enthusiasm is misfounded in 2024 being a huge year for Bitcoin. Like, I'm in the
Yeah.
same camp and seeing what's happening with the Bitcoin ETFs, how much money's flown in. Generally speaking, I know price hasn't reacted the way a lot of people were expecting or hoping it would, but
Yeah.
things don't happen overnight, all right? And you got to
Yeah.
look
This is going to take a couple
directionally.
of years. Yeah.
Yeah, it's
Yeah.
going to take a while, but directionally, the idea, even the accounting changes in like companies, and I don't know if you've
Awesome.
chatted with Michael Saylor
Yes.
about, him stacking sats continuously, but it's just gotten even easier now for companies to
Yeah.
hold this asset on their balance sheet. I
Yeah.
don't know what you see as maybe the untalked about bull case for Bitcoin beyond what we've already discussed.
Yeah, I still see it, that the layer two development is important, and there's just a lot of quiet progress happening there. Do you realize that, Zach, that the Bitcoin only VC funds, there have been a couple of them that just completed big raises, and they've been funding Bitcoin, especially layer two companies, all along. It's really been in the non-Bitcoin part of the crypto world where we had a deep winter in venture capital funding. But the Bitcoin venture capital funding just kept going. And a
Mm-hmm.
lot of folks are not talking about it because it's not sexy, right? But a lot of the building happens during the bear markets, during the proverbial crypto winters. And so I'm still a big fan of Lightning. I know folks are poo-pooing it and saying, that the number of Bitcoin locked in Lightning hasn't grown. And obviously with fees having gotten more expensive, there's been less a Bitcoin that's been locked in Lightning. But I will tell you this, Lightning is not transparent as to velocity. And the interesting thing about velocity is that Lightning, literally a transaction settles at this pretty close to the speed of light. And you can have, if you just think of how much data can move at the speed of light, and once it's settled, it's available to move again at the speed of light,
Mm-hmm.
and then again at the speed of light, and then again at the speed of light. How many times during a day can that same Bitcoin that's been locked in a Lightning channel support payments? Because settlement is so fast. You don't need a lot of Bitcoin locked in the Lightning channels. And I think market environments like this where the fees have gone up, so they're not closing out the channels back to the Bitcoin blockchain because it's expensive to do that. They'll just
Mm-hmm.
keep the channels open. This is when the channel optimization work gets done. I'm super excited about all that. So yeah, I'm a big fan of Lightning, and I let people poo poo it and focus on trading and other things. Okay, great. The real work is happening behind the scenes, and most of us who've been around Bitcoin for a long time, who are not just here for the trade,
Yep.
most of us have had very long term horizons. We were all playing a very long game, and that's where we are.
Yeah, and it's an exciting chapter to now be in, as I think you say that's where we are, and that's where I think a lot of the building starts to manifest, right? And we've heard a lot of people talk about payments in Bitcoin. I know it's also taken maybe a little bit longer, but the use cases there are now. You look at countries like Argentina, and that's something we didn't get a time or a
Yeah.
chance to discuss on this particular interview, but I do want to have you back to chat more about some of those use cases. And we, as a community-owned show, by the way, having our NFT holders tell us what we should be focusing on, a number of them have already said, aside from get Caitlin on to talk about the market risks that could be here around Bitcoin ETFs, have also mentioned we need to start focusing on the real world use cases of this technology now in other markets.
And go
I
beyond
think that's the beauty.
Americans, right? There's you got to talk to folks in Nigeria and Argentina and El Salvador. Yeah.
Exactly. No, I agree 100%. I think that's going to do it, Caitlin. I mean, I don't know if there's anything else that you wanted to throw in on other risks that people are looking, but you hit on them, and I feel like it's important to educate people who might not know markets. They know crypto, but don't know what's going on behind the scenes. I don't know if I'll let you have the last word.
Just educate yourself. There's so many resources available now, especially if you're new and you're curious and open minded. Just have an open mind and educate yourself. I would encourage. There are a couple of books that I really like: The Bitcoin Standard by Seyfuddin Amos, Layered Money by Nick Bhatia, and Broken Money by Lynn Alden. If you read
Mm-hmm.
those three books, you're going to get a pretty good sense of why Bitcoin is more than just a trading instrument. And will it succeed? I think Lynn has the right approach, which is it's going to take time, and we can't objectively predict that it will, but there's a very good chance that we're going to go back after 50 years of having fiat money crowding out hard money, sound money. We're
Mm-hmm.
going to go back to sound money again. And the reason she points out, this is a great way to end, is that the data leg of transactions has been able to move at essentially the speed of light ever since the telecom revolution, but we weren't able to move the money leg of transactions. When money was gold, the speed of settlement was limited by how fast you could move the gold by the speed of matter, which was
Yeah.
slow. And now we actually have a monetary instrument that's globally recognized, that nobody controls, and that can move and settle money at the speed of light. And that's where something big may very well be happening. And I welcome all the new folks who are curious. I think it is happening. It's going to take time, and
Yeah.
dig in and educate yourself.
I think it's very fitting that we're still waiting T+1, maybe T+2 days to figure out how much money's flown into these Bitcoin ETFs,
I know.
because that's how long we got to wait for that. And it's just
True.
so hilarious to watch it play out. But it's a very good point to end on. Caitlin Long, the founder of Custodia Bank, thank you so much for coming back on. And we were at PubKey, NYC's Bitcoin bar. I wish you could have been there to see what was going on in the celebrations around this. And next time in New York, I think it'd be fun to check out. But we put that piece out. You can check it out at
It was great.
coinage.media. Caitlin, thank you so much for coming on. I appreciate you taking the time. Thank you again. And thank you, everybody, for listening. You can check out the full interview with Caitlin. It's going to be posted on coinage.media after this. For Caitlin, for myself, thanks again for tuning in, everybody. We'll see you soon.